my pitch to him or her is that there is nothing wrong in borrowing, guys, right? You should borrow money for your business and everything. Just be sure that you can use that money productively in your business only. If it's like a saloon, he could have 1 or 2 lakhs and he'll still make a lot of money, right? Because it's only 1 or 2 salaries that he has to pay. If it's a trading business, he could do 50, 60, 70 lakhs and still have 4-5% margin in that. Okay. That's how it works, basically.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, and on today's episode, I'm talking about MSMEs and about lending. Both topics after a very long time. I haven't touched upon lending and MSMEs and both in the same company for quite some time. My guest, Harshvardhan Lunia, founder and MD, Lendingkart. Harsh, welcome to Paisa Vaisa. Thank you so much for doing this for our audience.
No, thanks Anupam for inviting us here. It's a privilege to come on your show.
Thank you so much for the kind words here. I mean, I've had the most interesting conversation before, of course, this recording started. But I want to just start with one hygiene question because, I just want to get that out of the way.
Yeah.
In terms of your regulatory status, like, what are you? Are you platform, NBFC? What exactly?
So, Anupam, we are a RBI registered NBFC.
Okay.
But we have a platform as well. So my holdco is a platform or a technology company, and it 100% owns an NBFC, which is RBI registered. So we do both the businesses. We do platform business as well, and we do our own NBFC as well.
Okay. But you can't take deposits from public. I think
No, not deposit
like
taking.
All NBFCs.
Like all NBFCs, we are a NDSI, which is non-deposit taking, systemically important, which is more than 500 crores. We are that institution.
Okay, cool. Let's start with your journey here. I mean, you guys are like 10 years old, like legit for a fintech startup. That's like I can't call you startup anymore, but tell us about the journey here.
Thanks, Anupam. I am feeling a bit old right now, though I am not that much. But yeah, it's been a good journey, Anupam. Like we were just discussing before this that I did CA, then I did MBA, then I come from a typical Marwadi business family, grew up in 2 BHK, has seen businesses all around, left my London job, came back to India to start something of my own, struggled in that bit. There's a Gujarati saying of 999 Divas, if you don't figure out a business or a model, shut it down and move on. Had 2 fathers to manage now, in-laws as well. Overall, then kind of realized that something had to be done. And I think this led to 2014, I wanted to give it another try before I go back to job, and Lendingkart happened. I think at that time, Anupam, the clear idea was that there was a gap in the market where there was a certain segment or segments of customers which the existing institutions did not want to cater. Maybe due to information asymmetry, data not being available, or access to them not being there, and multiple such stuff, right? And that's where I saw the gap, and maybe a lot of others also saw the gap. And it was at that time where alternate lending based on alternate data that was available in the market started, and that led to starting of Lendingkart.
Yeah, 2014 was like the start of the startup boom, as we know, and then everything fell in place 2016 ke baad. But of all the things at that point of time, you could have done, investment, you could have done mutual funds, you could have done a whole lot of stuff. So what was this gap that you were talking about? I'm more interested in that. I know the gap exists today also.
Yes, correct.
Okay, so I'm just trying to figure ki, 15 years later, what is the same and what has changed?
So I think rightfully suggesting, Anupam, ke finance area में या financial inclusion के लिए we needed payments, credit, insurance and investments. ये चारों gaps open थे, and when we started out, right, 13, 14, 15, it was a time when all the fintechs were happening, and I could have chosen anything. But coming from a business family, I had seen family and friends exchange money based on trust and give to each other and run their businesses. Similarly, I had, prior to my MBA, I had a business experience in MSME departments of 2 banks. Right? Overall.
Okay. So you were comfortable there.
I was more comfortable with lending. I understood lending better, and that's where it led to starting in this area. And one more thing that happened, Anupam, was 2 companies in US had gone for an IPO, which during that year in 14, which was similar business I was planning to get. So there was a market validation as well in global markets or developed markets that something like this can work and build.
Okay, cool.
Yeah.
Now, to understand your business, like the lending part is pretty simple to understand. We'll get to that.
Sure.
Where do you get your funds from? Wholesale market, or do you have something else?
So we both get equity and debt.
Okay.
Right? Equity comes from investors, which is normally like 80-20, right? So you put in your 20 rupees, you get 80 rupees from debt markets. Debt markets today typically comes from large NBFCs and large institutions like banks and everyone. We also do NCDs overall from public markets or primary markets. We also do securitization. We also do co-lending. So these are multiple ways of raising money, Anupam.
4x leverage is what you're talking
4
about.
to 5x
20.
leverage. Yeah,
ठीक
yeah,
है,
correct.
चलो 10 years, 3 lakh loans, 20,000 crores disbursed, 4,100 towns. I don't know. Are these numbers updated or is there more to it? They're all good?
They are all good. Yeah.
What are your learnings there so far? Because this is, it is some skill
Yeah,
to
correct.
have.
Correct.
You would have learned a lot.
Yeah.
Let's talk about that for a while.
Anupam, this is a big question,
Or
right?
top 3, chalo, ठीक है, whatever है. We have time on our hands.
Varna मैं I could spend hours on this itself, right? An entrepreneur's journey is actually learning each day. But I think top 3 learnings in building entire business was one is that lending and relying on people, like small businesses, is a business of trust, right? You can see the data, you can see them and everything, but finally we had algorithms and everything, but we could still rely on the smaller businessmen, right? So in India, technically, because the enforceability is low, right? You cannot go back and collect money that much as credibly you can do in developed markets. We still had initial days where people were not willing to bet on the small businesses, right? Small and micro businesses, that they won't pay you money back. The clear idea, like we said, we will be digital platform, right? So first of our earliest loans went to Guwahati, Jammu Kashmir, and people said, boss, for a 2 lakh rupee loan Guwahati, you even cannot afford a train ride, right? To go and collect money over there. If that guy doesn't pay and raises his hands, you're screwed, right? And at that time, the funda was touch and feel, meet and greet and everything, and nothing happened, right? And we gave the loan and trusted those people, and those people trusted us back and paid us back, right? So today, out of 20,000 crore, Anupam, 99.9% of our customer, we have never seen them, never met them. The money goes online and comes back online, right?
Wow.
So if you believe in people, trust in people, design the right product, you can build it. That's one learning that I had. Secondly, Anupam, I think last 10 years, last decade, we've seen quantum jump in technology being used, right? Everything becoming much more easier, comfortable and everything, right? For taxis, we used to call them earlier. Now we can do it on phone, mobile app and everything. We also realized that financial services might be a complex product because of the duration of the product, like 3 years, 5 years and everything, amounts being larger and everything. Still, if you design the right way or right medium, people still will come, access it and take money, right? Because we haven't set up even a single branch in the country, and that's again a realization that you can reduce OPEX throughout of it and everything, and that was again a belief we carried, and early days people still didn't believe us and we didn't have that choice, but at size and scale we've still proven that. So that's also another thing is good and correct. Third realization has been, as a founder, I have realized that Anupam, every day is a new fight, right? So when I started the journey, when I got my seed round, I felt very good. When I get Series A, Series B, I felt very good, and the company size and scale increased, right? So by 1920, what was happening was that in early days, what we had disbursed in a year, we would disburse in a quarter.
Wow.
Then we would disburse the same in a month. Then we would be disbursing every day, right? So first year, like we did 9 crores. So by 19 or 20, we were disbursing 10 crores, 10 crores every day.
Wow.
In 5 years or 6 years, right? In the size and scale. So we've grown 20, 30 times. From 9 crore, we took almost in 24 to 5,600 crore, right? So that size and scale. But that is all possible. Obviously, it's a pull product and you can disburse money. Though that was only possible that if you can get right kind of customer and everything. And the challenges don't subside. You normally want that beyond a level, there will be a time where I will relax and people will build the company and everything will go smoothly. It doesn't happen. So there is always a fire going on, which you have to douse.
I was hoping somewhere in there you'll throw in regulation, but now let me ask it to you upfront. The thing is that RBI is always there.
Correct.
And I think in the last few months or even over the last 10 years, RBI has always had a certain point of view towards MSME lending, and they're always been cautious, erring on the side of caution. What's your take on that? You know, your experience with regulation as something to contend with while building this kind of business out?
I do totally agree to the fact that in a sense, regulations, compliances, checklists and everything do act I wouldn't call it as a hindrance, but do act as a framework, guidance and mentoring, right? Obviously, you have to comply with that. It involves costs and everything. My only thought there is that, Anupam, why the regulator does it? That because it's a serious money involved, right? It's people's deposits going into banks, then coming from banks to us, and then we lend it to somebody else, right? So it's serious money involved over there. And it can have ripple effect, right? If one of us goes fat, it can be thousands of crores getting. So I think that is required. Secondly, I think it's their role to ensure that nothing goes wrong, everything works fine and everything. And also, because this is a pull product, anybody can disburse as much as they want. The critical piece is some money has to come back, right? So if they don't oversee something like this, then it's going to be a problematic, right?
Yeah.
See, the difference between an Amazon or a Ola or Uber is that there is some product, right? But if that product doesn't work, then only 1, 2 or 3 people are hurt. Here, thousands and thousands of people can be hurt, right?
Yeah.
So that's again there. So RBI has done a fantastic job. I think UPI success is one of the wonderful stories that we've globally created. Payment system now that we have is one of the fantastic in the world. I think for MSME lending, particularly, it's a complex space because you are finally evaluating a small and micro business, right? Compared to a salaried guy or a consumer who has a salary coming in every month, exact amount. You know he spends as well, everything. Here is a guy who will have a seasonal business, a cloth business, a merchandise business, or a FMCG business, or a mobile phone business. Very different margins, very different operating cycles, very different debtors, creditors, and all periods. So I think it's a complex business, and that's where I think a lot of fintechs like us found foothold because it was complex. It could be automated and standardized through machine learning and everything, and we all did that.
Okay. Now talking about the opportunity. Okay.
Yeah,
MSME lending though has been around for quite some time.
Correct.
But it's also a very tricky business. Banks have tried, NBFCs have tried, and एक ज़माने में मतलब the whole thing used to always be like you said, feet on the street, opening branches, branch to branch, reaching out, that kind of a thing, you know. So the opportunity was there, is there, will always be there. But the risks, you spoke about one part of it when you said about like people thinking 99% might not even pay your loan back. Let's talk about that for a while. What are the risks like?
So risk, Anupam, technically one of the risks that we perceive is that people will take it and not pay us back, which we technically call fraud. कि कोई ले लेगा और देगा नहीं वापस, right? That is still much lower. Business risk is very high, right? See, again, these are like proprietorship firms, family-run businesses, right? Like it's a sweet shop, right? Sweet shop, the sweet shop owner would be there, his daughter, sons would be there, wife would be helping him. Suddenly assume that the owner dies, right? And the sweet shop has to go down, right? The wife cannot run it, the children cannot run it, obviously. So the business risks are very high, right? They are not large corporates like overall who have multiple people, multiple capital sources and everything. So that risk is there. Similarly, what happens is assume it's a black swan event, but COVID happened, right? So then sweet shop is shut down for 4 months, you cannot do it. Assume it's an apparel store, right? An apparel store, maybe during the summer vacation, it runs very nice. But after that, in some time, it might not run. In rains, it might not work and stuff like that. So these are the technicalities that are there. What you have to understand here and what we have realized is that the loan amount that you give to the small borrower is very, very critical, right? The moment you overfeed him, it's difficult. The moment you underfeed him, it's very difficult. If you give him a right amount for a right duration, it can work for him and it can work for you as well. So that's what we've been cognizant of all across our journey, tried to keep it sane, reasonable and everything and build on that.
Okay. Let's talk about the strengths now. From what I know, there are 4 parts to lending. There's origination, underwriting, disbursements, collection. Okay. If I miss anything, please fill in the gaps out there.
No.
How has tech helped you in this?
So again, if you ask me, Anupam, out of all the 4 pieces, right? Origination, underwriting, disbursement and collections, right? Underwriting, collections and disbursals are procedural jobs, right? Procedural in the sense that you can automate it, standardize it overall. The biggest differentiator that anybody can build, right? If you look at Bajaj or HDFC is what kind of people you are bringing on yourself, right? Origination is very, very critical. If you get the right people and then underwrite them properly, disburse and collect them properly, you will solve all the problem, right? So people normally assume that underwriting is very important, collections is very important, but these are hygienes, right? Hygienes in the sense that basically it's like a body, in body it's like blood and all those things. If you don't have blood, the body will not work, right? Only thing is what distribution is like what torture you do the body, how much you train it and build it and everything, which is a thing you have in your hands, right? Overall. So that's there. And distribution got massively changed, Anupam, because of technology, right? The generation that we have now, our typical borrower, Anupam, is like 23 to 45 in age, middle-aged customer, entrepreneur, like 33, 34, average age, young children, teenage children, old parents and everything. And he is a person who has taken either a credit card or a consumer durable or a two-wheeler or three-wheeler. But business loan, a lot of times we are the first-time lenders for his business overall. He has an average daily balance of 75,000-80,000 rupees. Not the thela walas, right? He has proper balance.
Yeah.
He has a GST registered. He has a bureau score and stuff like that. And has aspirations to buy a house, car, fund his children's education, go abroad, travel abroad and everything. So this is typically the customer that we cater to, Anupam, in our journey. And this was important to reach out to this customer who is online, can submit documents to us online, and then take a loan online and pay us back online as well. So origination is one of the biggest differentiators that we brought in over here. Now the critical question is that you guys normally lend at higher rates compared to Bajaj and HDFC because their cost of funds are far lower compared to us, right? There again, the differentiation happens, Anupam, and where we spoke about the numbers, right? 4,100 towns and cities overall is like almost 13,000 pin codes in the country out of 19,000 pin codes. So just assume so I come from a small town called Taranagar, which is near Churu as a city, right? And Taranagar is like what, 20,000 population, 30,000 population would be there. There a guy has access to Flipkart, has access to Amazon and can order stuff. He sees on TV and everything, right?
They deliver.
Wow, okay. Over there, right? But he doesn't get a loan because there is not a branch of a bank or he does not have stuff like that. We can give a loan and we have given a loan to a person over there if he has banking data and GST data, whatever we require, available. So that's the kind of customer sitting in nooks and corners of the country, but he's educated, runs a proper business, a kirana store, mithai store, apparel store, mobile phone store, and wants to grow. We have provided. So that's where giving them access, reaching to nooks and corners of the country where they are, and conveniently on an easy medium, giving him loan was our critical strength that we solved for. So distribution has massively changed because of technology.
So I just realized one thing, right? Now, I don't know how many of the people that you mentioned in your customer profile have a basic credit score. What's been your experience so far with that?
So again, what has happened is, Anupam, when we started the business, almost 30-35% of our customers would not have a credit score. They would be like new to credit, first time borrowers and stuff like that. But across like last 10 years, I think bureaus have done a fantastic job. Banks have done a fantastic job. We've done a fantastic job, right? Because for 3 lakh loans that we've given out till now, we've almost evaluated kind of more than 1.5, 1.6 million applications, right? 15-16 lakh applications we've evaluated.
16 lakh में से 3 lakh
3 lakh को दिया है हमने लोग, तो वो कम है. लेकिन we've then helped those guys evaluate themselves, bureau में register करवाया, and all those things have happened. So those guys have come into fold. And today, I think technically what has happened is everybody, some sane has got some or the other loan, right, somewhere. And consumer durable industry has exploded. And if you travel, you get a loan. If you want a bike, car or anything, you get a loan. So everything's there. So I think that has happened. Now almost 100% of our customers have some or the other score, right? Like it could be early credit score of 1 to 5 or it could be a proper bureau score and everything. But almost every one of them have that.
Yeah. Any incidents in your journey that you want to relate in terms of the downs part? You know, I mean, you've been through a lot. What are the most challenging phases so far?
Challenging phases is this is a cyclical business, Anupam, right? So it's not a complex product, right? Amount होता है, interest rate होता है और tenor होता है.
That's
right. तो और कुछ नहीं है. But इसमें क्या होता है कि there are a lot of stakeholders. So one is, it starts from the bank who gives us money. Then we evaluate ourselves. We give the customer the loan. Then the customer is the one who will have his own risk. Like the bank, he runs a business, life, everything, multiple risks. Then he pays us back. And then we give the money back to the banks, right? So first and most important risk is the customer business risk. Then his fraud risk, life risk and everything. Second risk comes our risk, which is like our own operations going wrong, somewhere we going wrong and stuff like that, and we over leveraging ourselves, or we doing overdo things, right? In that sense. Thirdly, it comes from the institutions who are backing us as well, right? Lending institutions, economy, right? Because of if interest rates go up, last 2 years the interest rates have been literally on high, right? If we borrow at 13%, then how are we supposed to lend at lesser rates to that guy? So those banks, then something going wrong at their end. So it's a very, very complex situation where when a borrower takes a loan, people perceive that it's an individual who's taking a loan, but the entire ecosystem goes behind him. And economy is also there, right? If our GDP is not going good, our economy is not doing good, then he will struggle. And then we will struggle, and then the banks will struggle, and then that cycle rotates,
Obviously,
right? Overall.
yeah.
So if he struggles, we struggle, we don't get, and if we don't get them from them or don't pay them, then they struggle, and then the economy struggles again. So it's a complex product, right? So this is because we could do very good, but if he doesn't do good, then it's a pain. If we and he also does good, but the banks behind us or the economy doesn't do, we still get kicked, right? So it's not all in our hands. So that's where when you say 10 years and surviving, it feels a reasonably good job of being here and doing that.
A lot of people tried it, and some of them are there, some of them are not there.
Not there, yeah, exactly.
Okay, you spoke a lot about, now that we covered the lending part, I just want to ask you about the other side of the balance sheet. You spoke about institutions backing you.
Co-lending and securitization.
How is that, so if I were to ask you between both sides of the balance sheet, which one has been tougher? See, the lending part is, I would say, easy. That's core dhanda. But the other side, raising money, talking to investors, entire thing, how has that been so far?
So again, early days, Anupam, 14, 15, 16, it was like a tech boom, startup boom and everything. And we were raising, equity was comparatively easily available. Now it's a good struggle, right? For 2-3 years. Whoever is setting up business now, it's been not exactly that.
Tap has run dry probably.
Exactly. Tap has really run dry, right? Overall. Obviously, because of the US situation and global situation and everything that's already going on. The difference was that, so I think getting equity money was still easy. But what's happening in India is that the primary and secondary debt markets are still not built, right? The only source of fund that all NBFCs have is banks. Because they are the only deposit-taking institutions in the country who can have deposits, right? But banks have themselves gone through their own cyclical journey where they have seen NBFCs do good, bad, ugly and everything because based on the economy. So they themselves have their own ups and downs which go. Their ups and downs then affect us and then it affects the consumer finally, right? So it's been a struggle where rating agencies, these institutions, they take a lot of comfort in the corporate backgrounds of other institutions and everything. So if you are a new startup not from exactly from that background, want to serve a segment that's non-servable or financial inclusion if you want to do, it is a complex process, and that is also one of the reasons why few of us have not survived. Not necessarily because of the customer that we were catering was bad, but because on the other side, the institutions that were partnering and supporting us was not that great. So it's been a struggle.
I kind of, because I just think that when I look at other parts of business in India, which not to do with money.
Yeah.
Okay, the thing about money is that the raw material and finished product are the same.
Same, exactly.
Yahan se liya, wahan pe diya, that's it.
That's it.
If I'm an entrepreneur setting up, maybe a foods business or something, it's a little bit different. I have more freedom in life. I can go myself to people at the supplier side, funding side.
You can change them.
Yeah.
Right? You can get somebody more effective, efficient, and they'll be more than happy to do business with you.
ठीक है. तो वो opportunity बड़ा है, ये opportunity तो बड़ा है ही. If there was one thing you would want to be different on the funding side, on the other side of the balance sheet, makes your life easier to get that much more money, because you said cost of funds is what, 13%?
Yeah, 12.5%, 13% for us.
And we're supposedly at the starting of a lowering of interest rates, whatever.
Yeah.
If there was one thing you could change in terms of regulations that would make life easier, not just for you, but for the industry, what would that be?
See, again, it's a complex thing, Anupam, of asking that, but deposit licenses, right? They are kind of, we are not saying that it's monopoly, duopoly or oligopoly or something like that, but it's behaving in that form and fashion where you have restricted certain institutions, certain players whose inefficiencies are now affecting the entire ecosystem. We just happen to meet senior people in regulator and everything, and my simple answer is that 90% of my customers are priority sector lending, right? 80-85% of my customers are covered under credit guarantees. That's central government issues, basically, to give money to those class for financial inclusion. Still, if my cost of fund is 13%...
I was just going to ask you that. I didn't know about this 90% PSL and 80% C...
I should get money at 6, 7, 8%, right? Yeah. Because we are technically doing what the country seriously needs, right? Yeah. SME growth and everything. If my cost of fund is still 13%, right? then
something is off.
Something is off, exactly. Something is off, right? Then somebody is making far more money than they are supposed to be making, and somebody is struggling because of their profit taking, right?
I don't know, man. Think that it's 2025 and the government knows that the cost of capital in India is where it is, but maybe that's for a separate episode for other people to discuss. Bhai, आप तो धंधा चला रहे हो तो आपको you can't change the RBI. You can't change the regulators. You have to deal with.
And not necessarily it might be just with the regulator or overall it might be a government decision. Something has to happen at a strategic or systemic level, right?
Yeah, it's a government that stands behind the regulator. Na? So that's basically how it's run. So yeah, like I said, it's a topic that I really wish I could discuss longer, because everybody knows that the cost of capital in India is inverted. The people who need it the most get it at the highest cost.
Rates. Correct.
Okay, and the people, it's like the classic saying, right? That the banker gives you an umbrella when it is not raining. Folks, we're going to take a small break and come back. We're going to talk about the actual product that Harsh has at Lendingkart. Maybe some of you are MSMEs yourself, could be a customer and understand the product better. We'll be right back. Don't go anywhere.
Did you know Indians report nearly 800 cases of online financial fraud every day, which has resulted in losses exceeding 1,000 crores in the last 5 years? To keep you safe from such fraud, I am starting my newest podcast series, Conversation with Vigilante, an initiative by HDFC Bank. In every episode, I will feature special guests who can share expert insights on the different types of fraud, their modus operandi, and how you can protect your money. Stay safe, stay vigilant, and don't forget to tune into Conversation with Vigilante. Catch the episodes on all audio streaming platforms and V for Vigilante YouTube channel.
Welcome back. Harsh, how is the MSME sector doing in general?
I think, Anupam, like we discussed, right, overall, everything has a ripple effect, right? So if you borrow at higher rates in the market, right, then the entire supply chain loads up that on the margins, right? And now that an MSME is, normally the MSMEs that we serve are direct to consumers, right? So they are the last mile people serving like food and everything. If the cost of their borrowing goes up, their margins go up, right? Because the final price of an FMCG product, final price of a mobile phone and everything doesn't change, right? So the moment their margin goes up, they still have specified expenditures for home, personal loan, EMIs and everything, right? They start getting cash stripped, right, overall. Then they try to borrow more, but if interest rates are high, you don't have too many people giving you money. If you're giving, you just keep on borrowing more and more and more. And this is a bad cycle, right? And this is what we've seen for last 2 years. And that's where we blame MSMEs for not doing good, but it's an ecosystem or systemic problem that needs to be solved by somebody else as well, right, overall. So this is a cycle. So I think last 2.5 years, we've all been waiting for interest rate cut, but it hasn't happened overall. And that's why. So MSME right now, if you ask me, is not exactly in a very, very, very good state overall. But I think with interest rates reducing and overall India, the good part is that we have a lot of in-house consumption, right? We are not dependent on exports and everything, and MSMEs still cater to that in-house consumption. We are still reasonably sound, safe, and doing okay types, yeah.
Okay. Now, if an MSME, business person is listening to this show or watching this show, what's your pitch to him or her?
My pitch to him or her is that there is nothing wrong in borrowing, guys, right? You should borrow money for your business and everything. Just be sure that you can use that money productively in your business only. A lot of times what you have seen is that sometimes you get excess money for terms of a business and everything, but there are always pressing needs from the family, from the society, from the environment you are in. And sometimes when you have some excess cash available and everything, rather than productively using them, maybe a holiday, maybe a 2-wheeler, 3-wheeler or a car or some house repairing or some family trip or something can happen which is an expensive way of using business loans. So don't do that. But if you have a business, if you can make money out of that business, please go ahead and borrow. It's a form of leverage that will amplify your labor, help you make more money, and will create a better future for your family and society as well.
Yeah, I've noticed in some cases MSMEs who don't get this usually land up taking loans from places where the cost of funds are really high for
money
them.
lenders.
Yeah? So what are those sources usually? Like I've heard in some cases overdraft ho jata hai, personal credit card extend kar de. So just, for our audience out there, the wrong way and the right way.
Correct. So The right way, obviously, go to an institution that's RBI registered, go and apply to them. If they say no to you, then try to understand why you are not getting a loan. Maybe prepare for yourself for 6 months, 12 months, where we also guide customers that this is the reason that you're not doing and stuff like that. So that's the proper way of getting a money. The improper way could be money lenders overall, where you go to them and they charge from 2% or 5%, 6% per month overall.
Yeah.
So that's there. The other way could be there are like discounting agents who take a PDC from you and give you money against that. You could go to your suppliers and they could give you some based on some discount or charge you extra. That is there. Or you could borrow from cash market. That also still happens, right? If you have cash business, you can go ahead and borrow from cash market and everything. Only thing is that the price that you pay over there is far higher. And normally, if you don't calculate it properly, this could spiral up and increase your burden a lot more. And it gets difficult then to get out of it.
Okay. Now, I want to recap the profile of your average borrower. You had some fascinating, that's the thing about using tech, right?
Tech and data,
You can get a lot of clarity and granularity in the kind of. So, could you just recap that for us?
So, basically, Anupam, a typical borrower is like 23 to 45 in age, average age 33, 34, young children, teenage children, old parents. He's normally borrowed a 2-wheeler, 3-wheeler or a credit card. So, he's not exactly a first-time borrower, but a lot of customers, business loan, we are the first-time borrowers. He has $1,000 balance, like 75 to 80,000 rupees in his account. He has GST registration overall. And he's running typically a business that has revenues from 2 lakh rupees per month to 15 lakh rupees per month, right?
Wow.
So it'll be like 12 to 24 lakhs per year to 2 crores of revenue per year.
Wow.
So he's not a small guy. If it's like a saloon, he could have 1 or 2 lakhs and he'll still make a lot of money, right? Because it's only 1 or 2 salaries that he has to go. If it's a trading business, he could do 50, 60, 70 lakhs and still have 4-5% margin in that. Okay. So that's how it works.
Okay. What are your products? And maybe if you could just tell us about the products in terms of tenure, interest rates, average or indicative stuff like
we
that.
just carry one product.
Okay.
It's a small duration term loan. Our typical amount ranges starts from 1 lakh rupees overall to around 10 lakh, 15 lakh rupees. That's our average ticket is around 8 lakh rupees. We give till 35 lakhs, but it's a rare. Like more than 15 lakhs loans are very, very rare, and we don't appreciate that much. Mostly it's up 10 lakhs. Interest rate obviously starts from 14-15% and goes up to 24, 28 and 30% as well. Overall, depending on the borrower data and everything. Tenor is normally 24 to 36 months. So, but single product. So we have not complicated our product repertoire. We just tell people that for your working capital needs, right? Like buying of goods, paying salary, paying taxes and everything, we will give you a short duration loan that you can earn back from your profits and pay us back. That's it.
Okay. What do I get once I take your loan? Like, do you have a dashboard? Do you help me? Nudges?
We have a mobile app. We have a regular journey where we communicate with you through email, WhatsApp, messages and everything. For your EMI dates, we pre-call you, pre-message you. You have our app where you can get data, documents and everything. So those things which come with a conventional digital product, we have all of that ready with us.
Okay. And so you said that you are a platform business as well as an NBFC. So when I'm coming to your platform, do you offer me rates across from all banks or do you have Okay.
So what happens is typically when we sanction a borrower, Anupam, depending on the number of co-lenders that we have, one borrower might become eligible for 3 institutions, right?
Okay.
So at that time, we actually go ahead and tell them that these are the institutions. These are the interest rates normally that we can. Normally there is not much variation among interest rates, but these are the interest rates and this is how we can do it. Overall, and then he selects the institution a lot of times, or we also allocate him or suggest him that you should take it from him and everything. So it could be 3, it could be 2, it could be 1, it could be 4, it could be 0. When it's 0, then it's Lendingkart normally disbursing because we believe in the customer, we evaluated him and everything, and that's when he becomes our customers. But this is all algo driven, right? Over the algos will allocate the customer, the algos will decide, and algos will suggest, and then algos, because otherwise all institutions can get scary that maybe Lendingkart is getting the best customer to himself and not giving us. So that's how it works.
What's your mix of business just overall broadly?
80-20 kind of. 80% is co-lending, 70-80% is co-lending, and 20% is our own book.
Where do you get the tech from? I mean,
we build all in-house. All in-house. Yeah, all in-house.
See, now here I want to get you because I was talking to somebody the other day and he said a very fascinating thing to me that I didn't think of. He said, you look at all the top apps in the world.
Yeah.
It's built in-house.
In-house, exactly.
India में मुझे पता नहीं scene क्या है for banks and NBC and all that, whether it's in-house or not, but What's your view on this in general?
Huh.
Speak only of BFSI, speak only of lending. Okay,
Huh.
because lending tech in India is huge.
Yeah.
Okay, and there are a lot of people doing it for others.
Yeah.
What's your view and your experience so far?
So, Anupam, the only difference here was one was when did you start, right? If you started 2-3 years back, then you have a separate journey where a lot of modules were already created by people, right? We started 10 years back. Even at that time, like getting a website up and done, it was not easy, right? You didn't have the right kind of people, right kind of understanding, right kind of journey, because we were the earliest ones who even started thinking of digitizing the journey of the customer, right? So nobody had done that before. It was touch and feel, meet and greet, and a 5 kg file that used to run from process to process to get an answer to you, right? And it was totally opaque process, right? And in that opaque process, we were just reversing the entire thing by taking it online, being transparent, communicative and everything. So we had no choice other than to build it on our own, right? In terms of co-lending and like API integrations and online delivery. So today what happens when a customer comes to me, I get documents, I evaluate that documents, I share it with partners agreements are signed, and then partner disburses it and all that data comes to me and everything. This is all seamlessly done through APIs, right? Overall. For that, when we started co-lending in 1920 and before that also, there were not many. Today we have UB and other partners, but we didn't have co-lending partners. So we had to build it on our own one. Secondly, a lot of institutions would rely on our own in-house tech because it's a regulated business, right?
Correct.
Compliances are a problem, this and that. So people would be very clear that if LK is building it, LK is doing it, we will associate it with it. Then only it's good for us. Otherwise, we won't do it because they don't want to rely on a third-party pain created by us and they experience it, right? Because today when I give an HDFC bank loan, Anupam, the customer comes to me and I will service the loan for 3 years. But the loan agreement, the customer and everything is of HDFC Bank or any other large institution, right? For that matter. So these all complications, we didn't have a choice. Today, I think it's a lot more simpler where you can pick modules from here, there, partners and build much more easier.
AI? Future looking?
Future, I think, is like phenomenal in the sense that today last week only I was discussing with one of our seniors in tech where he said, Harsh, the core ground level job of coding will not be there now because all will be done by AI, right? Or open source will do everything, they'll code and everything. You just will need specialist people who can guide on what, how, when to be done, right? Overall. And that's where I think the beautiful part starts, Anupam, that till now also in automating and digitizing, we've done the basic stuff of like collecting the documents and doing KYC and overall reading the KYC and reading the documents and then machine learning and everything and then disbursing, right? Now the critical part of if all of this is easily done, then you will get into more complex aspects, right? Of what time your traffic is more, when do the customer wants, what is his pain point, why does he drop off? So you typically start in more behavioral fashion, right? So I'll give you a simple example. Like I was reading reports for one of the Uber Ola kinds of people, right? Basically, so the idea here was that they had typically seen that when you communicate to a driver or a guy who's going to sit in a ride, it didn't matter to him if it took 10 minutes, 15 minutes or 20 minutes to wait for the ride, if he was constantly aware of how much time he had to wait, right? Initial days. So the anxiety comes from the fact that you don't know, right? And that made the experience worse. You tell him it's 20 minutes, he's still okay to wait 20 minutes because he knows that within 20 minutes he'll get the ride, right? Overall. So that kind of opaqueness is super prevalent in financial services. You apply with all the documents, but you don't know when you will get a loan, whether you will get a loan or not, right? Overall. And we've all done a lot of that, but that kind of transparency and everything. And see, suddenly from 9-10 crores in first year, 5,600 crore, all of this was indirectly done by us, but now you start focusing on a lot more of these aspects, right? How do you bring right kind of people? How do you solve for their needs? And you keep them happy and satisfied as well. So that's the kind of learnings we'll now start building in our ecosystem.
Looks interesting. Okay. Winding down the episode now, I have to ask, delinquency, default rates, what are they like?
Normally, typically, we have delinquencies in the range of 3 to 4%.
Okay.
In bad times, it goes to 6-7%. In good times, it could come down to 2 to 3. So on an average, 4% is what we assume that out of 100 rupees we give, 4 will be bad.
And typically, what is the cycle like? how does this work? And I mean, I'm asking this only from the perspective that we've heard a lot of horror stories about how people have, downloaded unauthorized apps and then all kinds of things go wrong when you don't pay.
Correct.
What is the experience with you in terms of when you can you first of all predict that something's going to go wrong?
Yeah.
What happens when it does go wrong and what happens later? You just walk us through that.
So again, that a lot of those horror stories basically, Anupam, stem from consumer loan, right? Where the borrower is uneducated or ignorant about the risk and perils of what is he doing, right? Maybe he takes up a loan for some हारी बीमारी जैसे हम हिंदी में बोलते हैं or something like a house repair and everything, and he doesn't realize it is high interest rates and maybe his salary is not fixed and it's kind of a blue collar worker and everything. For us, Anupam, the good part is that this guy who we are giving money is technically an educated person. So again, one point that I forgot was all our customers are graduates.
Okay.
90+% of our customers are BA, BCom, BSc, running a coaching class, computer academy, kirana store or mithai store, staying in smaller towns and cities and running their businesses and bank, right? So kache ka bhi nahi hai business. So this business guy is typically understands his operating cycle, understands business, cash and everything. He borrows from us, puts in his business overall and starts generating more and more money. So that is there. But obviously business cycle could run amok, right? You buy some saris and you're not able to sell them in the season and the stock lies with you and you're not a bad guy, but you cannot pay your money back, right?
Yeah.
In that situation, typically what happens is we give time to the borrower for 7 days or 30 days that why don't you pay me back, and we sometimes, if possible, we restructure the loan as well, but obviously that will show out in your CIBIL. Normally, if it's 30 days and you don't pay us back, then, so 1 to 30 is we have in-house agencies who call people up, understand their problems and try to guide them. They said, don't do it. It'll be bad for you in future and everything. 30 onwards, you need to have somebody going and meeting him as well. And that's why we have people or feet on street overall who go and meet these guys, guide and mentor them. So 30 to 90, that is there. On 90 plus, typically it becomes an NPA, non-performing asset, where you have to provision for it and start provisioning for it. And that's where the client's bureau score also starts getting. So the good part is a lot of people understand that if they screw their bureau score, maybe their children won't get education loan, they will not get a car loan or a home loan in future. But few people it's out of their hands, so they might not be able to do it.
Yeah.
That's where again the people are feet on street or the agencies who work for us, they normally still try to go and collect and everything.
Yeah.
We parallelly also start a legal process overall because for recoveries and everything, it's a difficult world out there. We also need to have legal on our side so that legal process starts. It's not as much enforceable as in developed economies, but all of this process has to be done.
I mean, these are unsecured loans, right?
These are unsecured loans, clean credit.
Yeah.
So we don't have anything backing. If the customer defaults, it's just customer's word that we can take back, nothing else.
And then it's a write-off for you completely. Once
it's a write-off.
Complete the cycle, it's a... But out of 100 rupees, 97 comes back, 3, 4, whatever it is, good days, bad days is...
Correct.
But that's, that's not just for you, it's for the entire system as such.
It's for the entire system. The difficult part is that it's a thin margin business.
Yeah.
If one customer defaults your 100 rupees, you need to get 25 good customers or 30 good customers paying you to fulfill for that. So just assume that one bad guy makes an interest rate higher for 30 other people in the ecosystem.
I didn't realize it. I like the way that you put that.
Yeah.
But that is reality.
That is reality.
That's
exactly.
how the business runs.
Yeah,
okay.
Yeah.
We are done now. Future plans?
I think we've done Anupam first product, which is a very, very complex product of clean credit, pan-India, digital and everything. Now I think the idea is that if we can enhance our relationship with the same borrower, with a second, third, fourth product, it could be a home loan against property, credit card and everything. We'll be very happy to increase our relationship, revenues and everything with the customer and everything and deepen our relationship, right? And I think the good part is that we've tied up with a lot of co-lenders overall. So today, I might not be able to compete with a home loan or a LAP from an HDFC bank, but the Bajaj is our partner, or Aditya Birla or Chola or whoever are the partners, our partners can fight among themselves and serve the customer better. So that's the future plan of going into secured and other products as well.
Okay, a checklist for our audience out there who's now, now that he or she is at the end of this episode and is interested in like exploring this further. How should he or she choose a platform or someone who can lend money to him or her? What's the right way to evaluate? Some kind of checklist.
So guys, first and foremost is whether the entity is a regulated entity or not, right? The NBFC license is very, very important, right? Secondly, size and scale does matter, right? If somebody has some loan book of 25, 50, 100 crores, they are far more riskier than compared to somebody who has a 5, 7, 8,000 crore or 20,000 crore of book, everything that's there. Thirdly, I think an online check on reputation, online check on name, and online check on whether they are involved in defaults or everything is again going to be critical, right? If you have very, very valid documents and everything, look at the partnerships that you can. And my suggestion would be that since it's an online process, if you can apply and take loan, apply and get offers from 2-3 institutions, go ahead and do that and then decide the best offer, right? Need not necessarily restrict yourself to just one. It might hurt my business itself, but it still makes sense that you have to be prudent enough in selecting the organization that understands you better.
I think most important to me, at least maybe for a guy who runs a shop or a business, may or may not be able to figure out your loan book.
Yeah.
You would have to go to Google.
Google, exactly, yeah.
But the easiest thing to verify would be the license. So folks,
Correct,
please,
yeah. License is very important.
please, if you're downloading an app, check the license. The license has to be prominently displayed, whether it's on the website or it's on the app. There'll either be a PDF or a registration number. Unless and until you do not see that, please, please, please do not step any further than that. I hope that I've...
Yeah, exactly.
That would have save you from a lot of problems that could potentially happen in the future. Okay, Harsh, final question that we have for all our guests who come in. If you read books, any book recommendations or anything else that you're watching or seeing that you would like to recommend to our audience?
No, I think I am a voracious reader. I like to read a lot, Anupam, but I like biographies, right?
Oh, nice.
So I appreciate Elon Musk's biography, Steve Jobs' biography, and these are like iconic people, right? Overall, the good part about biographies that I love is that it shows the struggles of all the people, right? We normally get overwhelmed by our struggles, but even if it's a guy who's iconic or great, he's gone through similar struggles, and the only thing that I've realized is that he's put in effort and is still standing, right? To be there, to reach to the level where he has reached. So I think I have realized across my journey that, guys, if chances are, read few good biographies and then try to be standing. That's it, right? That's the important piece. Do good, do bad. Everybody's gonna die and turn to ashes. Only thing, if you're standing, that's very important.
On that note of positivity and inspiration, that is a wrap on this episode of Paisa Vaisa. My guest, Harshvardhan Lunia, founder and MD Lendingkart. Harsh, thank you so much for doing this.
Thanks a lot, Anupam. Thanks a lot for hosting me here.
Great to have you here.
Same here.